Everything that can be digitized eventually will be digitized, which links to Hans Westberg's idea of everything that can benefit from being connected will eventually be connected. And the fact that new demographics, new generations of digital natives will be doing business abruptly differently from today. And that digital platforms also enable new forms of decoupling of financial services from traditional financial services players. And if you ask millennials, or as we know them in Sweden, the 80-talisterna, or internationally Gen Ys, if you ask them about which industry is the most likely industry to suffer from massive digital disruption, they point the finger at all of us in the banking industry. Let me just share some of the statistics from the Millennial Disruption Index by Scratch. So Scratch set out to identify the industries most likely to be transformed by millennials, the largest generation in American history. And of course, banking is what they pointed to. And the question is, what our relevance as an industry is going to be with this younger generation of digital natives who speak technology without an accent? According to the research, 53% don't think their bank offers anything different than other banks, and 71% would rather go to the dentist than listen to what banks are saying. 1 in 3 are open to switching banks in the next 90 days and say they don't see any difference between my bank and all the others. Essentially, they are commodities to these millennials. All 4 of the leading banks in the United States are among the 10 least loved brands by millennials. Clearly, they've done something to piss them off, is the technical term. 68% say that in 5 years, the way we access our money will be totally different. 70% said that in 5 years, the way we pay for things will be totally different. And 33% say that we don't believe we'll need a bank at all. The change as a result will be seismic. So is this something that just happens in the United States? No, it happens right here. Welcome to Sweden, the most cashless society in the world. There's been a 59% increase of sales of Situation Stockholm sold by homeless people in Stockholm as a result of their mobilization, i.e. taking payments not just via cash, but via iSettle. We've reached a 30-year low in the number of armed robberies, according to the Swedish Bankers Association, and 50% of Swedish pensioners use cash cards everywhere, according to our National Pensioners Organization. That means that 1 in 2 of Swedish grandmothers are the coolest, most digitized grandmas in the entire world. Now, we also know, based on research from this country, that according to AVG IT Security, more 2 to 5-year-olds in Sweden today know how to play Angry Birds on their smartphones than actually know how to tie their shoelaces. If you thought the 80-talister were just a little bit eccentric and weird, how weird is this next generation going to be? For them, a product disclosure form on the floor is simply an iPad that doesn't work. They are born digital, they think digital first, and then we try to explain a check to them and why we used to have to mail money from one to another via Svenska Posten. They just don't understand this. The great American management guru and philosopher, George Costanza, said that for everything important in life, it needs to have a physical package. For your cash, there's your wallet. But is this true? Already Google Wallet is here, and Apple Pay is being launched. Money or cash is already just virtualized data. And as one of your colleagues in Shanghai who I had dinner with on Friday night said, sometimes I think that we are just an IT company with a banking license. New over-the-top players are using the digital infrastructure to decouple finance from traditional finance players. Be they from my mates, Brett King at Moven, or Simple, or Tink, or Pocketbook, or Mint. These guys are over-the-top players that are educating the next generation on the fact that we can deal with this concept of virtualized data and money, but we don't need a bank for it. In the era of collaborative consumption, courtesy and kudos and respect to my colleague Rachel Botsman for codifying this term, people feel very comfortable going on to Kickstarter for funding their next business idea, or Indiegogo, or they might start lending money on Zopa or on Lending Club, and using alternative digital currencies like Bitcoin to transact in new ways. And according to research at Indiegogo, which is a crowdfunding platform, these new platforms are replacing your local business banker, because people prefer to go to a crowdfunding platform if they're in the startup phase. Why? Because they get to put their idea out there to the world of a new product or a new service, and they get instant feedback on it, removing some of the risk that when they launch, they actually know whether their idea is good or not before. Bain did some research last year, which I think is counterintuitive, but I think it confirms something a lot of us also kind of know. And that is that the more digitally engaged your customers are with you, the more they enjoy your mobilized interfaces or your foreign exchange interface, whatever it happens to be, the higher the net promoter score for that client, and the more products they hold. The least digitally engaged customers, according to Bain, amongst mass affluent and affluent customers in the United States, the less digitally engaged they are, the lower the average number of products they hold with a bank. But the higher their digital engagement across channels with you, the more products on average they hold, and the higher their net promoter score for you as a brand. But we sometimes resist this idea because we think the digital customer is digitally promiscuous, likely to jump around. But in fact, they're more engaged and they are better brand advocates for you.